Our next session is a panel discussion. It will be conducted in a few minutes. The subject is the bridging capital innovation, unlocking investment in Middle East. Our panelists are Dr. Khalil and Hanashi, Senior Renewable Energy Advisor, and Mr. Rohal, CEO of Transcontinental Energy and Service. Our third is Dr. Anila, who is the partner of ESG, and Mr. Ishaq Al-Ma'wali, Head of Investment and Cooperation Advisory, and the moderator will be Mr. Mohammed Al-Sagri, who is the Head of Sharia Structuring. Please come to the stage.
Bismillahir Rahmanir Rahim. Assalamu alaikum and a very good morning to all. We are going to proceed with the discussion today entitled Bridging Capital and Innovation, Unlocking Investment in Middle East Energy. I know the topic is quite mouthful. In short, is that we are going to talk and deep dive about where is the money. Wain fulus, yani. Now we have talking a lot. We have discussed a lot of agenda points, key takeaways, and this cannot happen unless access to funding is there for everyone, policymaker, industry player, consultant, as well as the financial industry. So joining me on stage, we have four learned speakers. On my extreme left is Mr. Ishaq Ma'wali. He is currently the head of proprietary investment and capital advisory at Bank Nizwa. Previously, he was the board member at Bank Nizwa as well as the general manager in one of the biggest pension fund in Oman. Welcome, Mr. Ishaq. Next to him is Mr. Rahul Patel. Quite a colorful background. Used to be an investment banker, fellow investment banker from Merrill Lynch. He is currently the principal and chief executive officer of TCES, an E&P company. Welcome, Mr. Rahul.
Thank you.
Next to him is Dr. Elina Primikiri. She is a seasoned consultant in the aspect of ESG, SDG, green financing, green loan, and what have you from the Unicus. And last but not least, welcome, Mr. Elina. Ms. Elina. Last but not least, Dr. Khalil Al-Hanashi. He is currently the senior. Title is quite long. He is currently the senior energy renewal advisor with Petroleum Development of Oman. And as we know, PDO is the torchbearer of Oman's oil and gas industry. And therefore, he will share with us his aspect. I'll go to him first, basically with regards to PDO role in this aspect. So, and, last but not least, the moderator for today, I'm Muhammad Nur Anwar bin Sajari from Bank Nizwa, currently the head of structuring, overseeing the structuring for both carbon-based and non-carbon-based economy in Oman. All right, over to you, Dr. Khalil. PDO all this while has been branded as the oil and gas torchbearer flag company in Oman. It's very big and everybody looking at PDO as a policy. What you do is going to set the industry further. Be it from the industry player oil and gas, be it from the contractors and subcontractors, as well as the banking. Yeah. So we would like to see, as you know, right now, Oman has a very ambitious net zero carbon target in 2050. And then Oman also is progressively promoting its non-carbon based economy, including hydrogen. We would like to know, how do you see PDO is playing its role, and to which direction the company is balancing its future play? Can you share your thought with us? Thank you.
Thank you for the question and for the invite to be in this panel. I think if we rephrase the no carbon into adding the letter L and making it low carbon. So in essence, that is what PDO purpose, which is to build a sustainable and low carbon future to maximize value for Oman. So this is our about 2 years rebranded purpose. So the focus on low carbon is what we think will drive the prosperity of the country here. And then when we talk about low carbon, that entails some modifications or some adjustment to the way we do business today. And we normally start with our own energy consumption. So we produce oil and gas. Indeed, that will remain the core business of PDO. The way we produce oil and gas will change or is changing already in a way that it has to be done in a low carbon manner. And we start with our own energy consumption. So we consume quite a lot of energy as well. So more and more of our own energy is coming from renewable energy, for example. And I was just discussing with the panelists that the first utility scale solar farm in Oman was actually set built by BDO back in the days. Today we also have 2 wind farms in the contracting stage and another solar farm. So our own energy consumption will become greener. So we reduce the carbon intensity of our product. The other aspect that we really focus on is our operations and the efficiencies within our operations. We deal with methane, and methane is one of the sort of potent gas, or the climate impact of methane emissions is much higher than CO2. So in a future where we are climate cautious, we are all part of the solution. We're doing a lot of work to really manage our methane emission. And recently we have achieved the gold standard in methane management. This is an OGMP 2.0, which is an oil and gas industry standard that gives you different levels of adherence to the standard. We are a gold standard methane management company. That means we really focus on the efficiencies of our production, consuming greener energy, but also ensuring that we do not, we operate in very efficient manner, whether it is on emission detection or emission reduction, but also on efficiencies within our equipment. So in a nutshell, we're moving into being more CO2 footprint cautious while we stay in the core oil and gas business, because we believe in the future it's not only the price of the oil that will be differentiator, it also will be the carbon footprint will become a differentiator slowly in many commodities. And so we are ready for that future, which will be a low carbon future, and we are where we wanted to continue to be a key player in the energy sector in a low carbon and sustainable manner.
Thank you very much, Dr. Khalil. He touched upon a very important point on the solar just now, which is now an upcoming sector in Oman. I'll go back to you with regards to the how PDO basically manage, for example, your the industry waste. So this is perhaps, we know at the outset PDO has set the bar when basically the operator, the company who do the services, the contractor for PDO, they have a certain standard to meet as far as PDO is concerned. We would like to know also what happened to the industry waste, how PDO is dealing with this on the second round. Later I'll come back to you. Thank you very much, Dr. Khalil. Dr. Elena, all right. This is, of course, your specialty with regards to coming out with policy and to advise the companies out there with regards to the ESG, for example. Now, many companies these days feel that, I wanted to say they are perhaps confused with the spaghetti of words, ESG, SDG, green industry, green tech, what have you, sustainable financing. So all these are a spaghetti of words, and sometimes they confuse. In fact, even external ratings also they are juggling. What aspect do they look at? So if they say, for example, a company wishes to proceed with this ESG agenda, can you share your thoughts? How a company, for example, from the mid-size to big one, how can they start? Where to start and what to be focusing on? Over to you, Dr. Elena.
Thank you so much, and thank you so much for the invitation to be in this panel. I appreciate it. How we start the journey for our companies that we collaborate is, first of all, we do this materiality assessment. We need to understand what is important. And this importance is mainly focused on the expectations from all stakeholders, be it the regulators, external stakeholders, so regulators, investors. You mentioned about the rating systems, you mentioned about the reporting frameworks which are mandatory. You mentioned on different things. So the expectations are different, be it from the clients, be it from suppliers, but also internal. Top management priorities, employees' expectations, as well as the sustainability teams who work internally. This step is the most important thing, and it has to happen every 2 years because the expectations change. The regulatory frameworks change. So companies need to build resilience around these changes and understand what are the risks and opportunities which are relevant for this specific business, for the specific industry, at this specific geography, and as well as this specific time of this specific year. So once you draw these, I would say, material topics, you identify what is relevant, what has priority in our organization, depending on the environmental, but also social and governance aspects. That's when you start the journey. Then you develop a robust framework. Now, we've seen a lot of organizations having the best plans in place, but if the governance is not there in place to ensure a seamless process of the implementation of this roadmap, then it won't work. So a robust framework would have a very solid vision, mission around this area. It will have a very good governance structure, and it will have specific policies and processes whereby the organization will be very well aware of. Of course, to establish that, you need to have trainings, you need to have internal awareness sessions, change management. A lot of times, that's for sure something we need to look into. The fourth step is to build the roadmap. Now, the roadmap would have elements of climate risk assessment and scenario analysis, that you need to be aware of the risks that could affect your balance sheets at the end of the day. The second thing is you need to ensure what are the opportunities through a decarbonization strategy, right? Like what you mentioned before about the first solar energy plan, and to understand what are my targets, what are the important things that I need to achieve in that specific span of time, short term, medium term, long term, and build specific steps, initiatives that will feed that overall target. Now, the reason you need these structured approaches is that we've seen in the past organizations doing a lot of initiatives, but they were not contributing to the overall agenda of the company. So you need to be very, very focused on the things that organizations need to focus on the priorities they're having to ensure a smooth, I would say, journey. And the last thing is the reporting and building the transparency around the things you are doing. Now there, of course, there is a plethora of reporting frameworks, I agree with you, and the reporting and the rating agencies. My suggestion always is just follow what is relevant for the region. So I would go with, whatever the stock exchange mandates in terms of reporting framework, and be a little bit proactive in terms of what is coming. So for example, IFRS S1, S2 is something which has been established, and it seems that it's going to be also evolving in this region. So I would start my journey to understand where am I, what are the gaps that I have through this new reporting framework. So proactively, I can prepare myself for what is coming. So there I'm not overwhelmed with what is happening, and I just keep myself, in pace of what I need to report on and how.
Thank you very much, Dr. Elena. It is nice to hear, especially your practical suggestion to start with the materialistic assessment. And in fact, many companies are looking into this journey by having this materialistic assessment. That's one of the funny stories here, not happening in Oman, in one of the jurisdiction. They start off the materialistic assessment to the extent that it gives them a nightmare because it requires them to change the entire business model. So I think I will deep dive into this. We have the time on the second round on how we can push forward from this baby step journey materialistic assessment until the reporting, which is another, I think, stumbling block that we have to look at. Okay, over to Mr. Rahul Patel. Well, TCS, if I'm not mistaken, it is an EMP and a service company, yeah? And then, you have a very colorful investment banker background, whereby access to funding, we say that it is based on the three principles: better, cheaper, faster. And then on this aspect, you did mention that you wanted to highlight about the access to private equity funds. And perhaps this also will change the business model of a certain company. Can you please elaborate on that point?
Sure. So when it comes to basically to looking at oil and gas service sector, specifically in the today's environment, the most important aspect when it comes to raising funds or access to capital is every service company needs to make an account and needs to make sure that there are favorable terms, there is flexibility available out there in the market, competitive interest rates, equity financing are aligned with their cash flow, which is a very, very important aspect because as a service company, you're carrying a lot of capex as well as a labor investments. So flexible debt structures are also another very, very, very important aspect when it comes to raising debt or raising capital. And it has to align with your capital structure. It has to align with your cash flows. Access to senior debt and mezzanine debt is another important aspect which needs to be looked into while raising funding or raising capital. We also look for access to diversified pool of investors, which means private equity firms, ESG funds, banks, etc., other debt sources. The wish list, basically the wish list of funding is a combination of cheaper debt, longer debt, and with a lot of options of variables. Also, debt has to be structured in an oil and gas service company in a manner of allowances. Market conditions are not always same. Utilization rates are not always same. We are some days dealing with market conditions aligned to $100 oil versus $52 oil in less than 6 months or 8 months sometimes. So it is extremely important for a service sector to ensure that proper capex is available for you in the marketplaces. Shorter term fundings by NBFCs or capital companies is not really an option. Longer term healthy funding is a very, very, very important aspect of it.
Thank you, Mr. Rahul. Okay, I'll go further later on, especially you talk about the access to funding. Now, what do you think if, for example, a company would like to issue a certain instrument, be it debt or equity? What do you think? Because now we have changed sides, right? From the financial advisory to the one who runs the company, which is on the supply side. So from this angle, how you think you can merge these both worlds to make this company or this instrument a darling to the investor, be it ESG or those who look for the sustainable investment, both in terms of the capital protection as well as the gain on the yield? Over to you.
So in terms of raising funding when it comes to ESG investments, a proper roadmap for ESG, long-term ESG stewardship is required. A decarbonization investments in electrification of your fleets, your engines, your machines, whatever service sector you're sitting into. Just to give you example, we have almost 5,000, as a company, we have 5,000 diesel engines in the company. Our goal in next 4.5 years is to convert every single engine, which is diesel oriented or hydraulic oriented, into an electrification model. So a clear, robust strategy of energy transition, a roadmap, is required by all service companies moving in future to attract ESG investments and ESG funds. And there has to be a lot of transparencies when you come to ESG reporting. Just to give a basic example, when you get on a certain well location and you have an electric fleet, doesn't mean you earn the whole credit of ESG or a decarbonization. It has to start from the moment you are prepping your fleet, from the moment you're driving your fleet to any certain engines or any certain frac pumps or etc., whatever equipment you have. A proper, robust reporting from the start to finish is required. transparency. Every ESG funds or any ESG commitments are going to look at the transparency of your reporting. Under reporting, just value-based reporting is not an option. So to unlock a lot of ESG capital, transparency in reporting, a clear roadmap, decarbonization strategy, electrification strategy are the most important aspects of governance.
Thank you very much, Rahul. Well noted on that. Okay, moving on to Mr. Ishaq Ma'wali. We'd like to draw from your experience running one of the biggest pension fund in Oman back then for a number of years. And then right now you are with Bank Nizwa, the one who will advise the company. So perhaps you can share with us from your perspective, if you're talking about the pension fund, sovereign wealth fund, or GRE in Oman, government-related entities, they have access to liquidity, number one. They have very deep liquidity as well, to the extent that they are very picky to which stocks or what companies they would like to invest. And then having known this, if we look at the ESG or SDG index, some companies are technically underperforming. And because this day money matters, and they said every fulus, every baisa count. So can you share with us, perhaps from this sovereign wealth fund or sovereign wealth fund as well as the pension funds in Oman, what actually in their mind when they actually thinking to invest or support a company who wishes to start the ESG journey? Thank you.
Thank you, Brother Muhammad. I think most of my colleagues, they have touched up on certain areas that will complement the full picture of ESG investment or sustainability. I will start, and I do agree with my colleague Rahul when it comes to the financing and the clearness of the roadmap. That is very critical, even from the investor point of view. If I would start with the previous experience, you mentioned the largest pension fund globally, and in particular Oman, they are mandated and they are requested not only by the local government, by the even international association, like the association, what you call the ISA, the International Association for Social Security Pension Funds globally. They are required to invest actually in sustainability and these kind of investment. There is certain KPI in this, and I would say that either the either the pension fund or the sovereign fund, they do share a very common important factor between them. One, they are indeed they are long-term investments, and the way they do it, the patience they have. In addition to that, their risk tolerance. So they can wait and they are patient for these companies to actually realize a profit. So when it comes, because of these two factors, they, as sovereign funds or a pension fund, they play a critical role in this catalyst in terms of the energy transition, investing in this. They are looking at not only as a KPI from the social perspective, but as well as in terms of performance of those companies. I think the time is still there. There is really a niche in this sector. Return is there. So when it comes to the the sovereign fund, they are helping and supporting by allocating indeed the capital to these companies, by trying to supporting the blended structure finance and encouraging these kind of partnership. I think there we have examples here in Oman and globally where the sovereign fund of the country, they do partner with certain stakeholders within the country and they fund them in order to help that. Investing in ESG stocks, that is very important as well in terms of adding to their support for this. There is type of investors who are really upscaling this kind of companies. And in particular, I'm talking about private equity. When the private equity funds, they do invest in these kind of investments, I'm sure they are, they are there to help and to add a value in certain areas in the specialty that they do have. So they do invest, let's say, 30% or 40% in the company, and they sit on the board of that company, and they specialize in certain areas like technology or transformation that will add a value. So any investor, if he see, as Rahul mentioned, if there is a roadmap, there is credibility, there is the company is very serious, cash flow is promising. So I think, Mr. Chairman, it will be promising for any investor to be in in that investment. So to conclude, I think the three of them, the three examples I get, either a normal investor like we in Bank Nazwa, or a private equity, or a sovereign fund, they read really that credibility, so they will invest in this. So there is a regulatory side of it, there is really a cost side of it, and I think that's really a promising investment, and we are here to help. Thank you so much.
Thank you very much, Mr. Ishaq. Time is not with us, unfortunately. Time is very limited. I wish I can open to the floor if there is any questions. Otherwise, we will ask perhaps one of the two panel to do the wrap up. 1, 2, 3, 4. Nothing. All right. Moving on to yes.
I want
Dr.
to
Alina.
add something to
Sure, please.
Sure.
what you were saying. So we're, in addition to 100% agree, in addition to that, I would say that we are seeing also international banks having some financial instruments. So we're seeing the sustainability linked loans and green loans and social loans and green bonds and social bonds, which all kind of contribute into raising capital within the company. So once the plan is in place and there are specific roadmaps, as you mentioned, portions of it could be funded by banks, or you could raise a bond within the company, so that you could actually have access to capital to kind of facilitate a little bit the journey.
Thank you, Dr. Alina. You want to add?
Maybe, I can add a little bit to it. So today's marketplace, we still see an option of not having a fully integrated ESG when it comes to unlocking capital. But 10 years down the road, 5 years down the road, I don't think that is an option. Investors, board of directors, young generation, Gen Zs coming in, they are going to demand this. So it is better that we put this policy framework when it comes to regulatory, when it comes to our financial discipline, and as well as our emissions discipline in place today. Today's in place will result in tomorrow's success for everybody. So from a service sector perspective, from an E&P perspective, it has become a very, very important aspect today to have departments, committees based for this, focused on this, focus groups on it, and which will lead to the financial success of any E&P or any service sector company or any, matter of fact, any energy company in general. That's why. Thank you.
Thank you, Mr. Rahul. Before we conclude the session, perhaps I'll go back to Dr. Khalil Al-Hanashi on behalf of the panelists here. You know that, again, I'll go back to PDO as the case study, because PDO is sitting at the center of everything with regards to oil consumption, sustainable objectives with regards to oil and gas industry, waste management as far as the oil and gas industry is concerned, renewable energy and what have you. Just now you raised a very important point and very interesting point on lowering the carbon emission. Instead of too much focusing on making it a net zero carbon, you are being more practical to highlight that we should be focusing to lower the carbon emission, go to the renewable energy, and then making the process sustainable. So perhaps you can share with us within these 3 minutes, we call it sudden death if you play football, what is the key takeaway that you can share with us as far as the ESG is concerned? Thank you.
Right, thank you for the question. I think I will latch on the point raised by Dr. Elena here. you really need to understand your material topics. Like, what is it that makes difference for your business? When you look into the ESG technologies, innovation, you are overwhelmed by so many newcomers. And unless you first set your mind on at least 3 top material topics or impactful topics for your business, once you create that understanding, you move to the next step on getting the right investment for those topics. And saying that we need to also be very cautious in a business world, that to prioritize what I call projects that are good for the climate but also good for the wallet. There are certain projects that have a double sort of impact. They are helping your sustainability sort of agenda, but also they are also profitable, or their MBV of those projects is good or promising. If you go to your board of directors and start listing all your sustainability wish list, you normally get sort of the look, we don't have all the money. So being very selective and having your material topic identified, then a list of projects prioritized in a way that it does not impact your financial flows. Because at the end of the day, if you go too sustainable, too fast, you probably break the wheels. If you go too slow, you probably miss the boat. But ability to calibrate your speed and scale, I always refer to the speed and scale. How big and how fast you move into those sustainable projects is very key in going forward. And I think that is my take on anybody who was in the strategizing or planning, because we in this region, we're still in that early phase of implementation. A lot of people still in the strategy and planning phase. Demonstrators, few projects were actually initiated. The vast majority of the business is still in the traditional sort of sector. Slowly moving in, but then the business environment, as was highlighted, $100 oil to $50 oil in 6 weeks is very volatile. And our ability also to react with agility to what happens around us is very important. If the ESG rating becomes the top priority for the projects you are doing, focus on that project, improve its ESG rating so you can get the financing flowing into it.
Thank you very much, Dr. Khalil. Time is of the essence. Unfortunately, this is a combination of, I would say, nearly 100 years of experience between the panelists, and we are being asked to compress all in within just a mere 40 minutes. And the topics are of importance, and I believe all of us have benefit a lot. And of course, you can always have the side discussion. I'm not sure whether that is free consultancy or fulus, as we're talking about. I mean, you can always access to the speakers right after the session. And on that note, on behalf of the organizer, I would like to thank Dr. Khalil, Dr. Elina, Mr. Rahul, and Mr. Ishaq for your succinct points shared with the audience. And inshallah khair, if all goes well, we are going to see you again next year in OPES 2026. With that note, thank you very much and see you at the top. Assalamu alaikum and good afternoon.
Thank you.
Thank you.
Thank you, Mr. Moderator.
Thank you.